So when to take profits in this cryptocurrency bull market? We get asked this question an awful lot in terms of cycle methodology, when to buy, when to sell, but there's probable data to tell us when certain things are going to happen in the market. If you made some money around that point, it might be a good idea to, exit. First of all, welcome to the channel. This is Learning Crypto. You may have seen me before. My name is Market Mobster, or known as Ash. Hit the subscribe button. More educational content coming. So in terms of the education side, we've got to talk about the 4 little phases, right? So it's very simple, really. Accumulation, markup, distribution, markdown. We are starting to enter the markup phase where it gets a little bit crazy, certainly for cryptocurrency, and we'll go through that in a bit. But you also hear of bubbles bursting, crashes, or recovery. Yes, you've probably heard of them. You've probably been sick to death of them. But realistically, it's crazy. It's all in your head. But the data is there and it proves it with certain things we're going to go through in this video in terms of where we could be looking at a potential area where maybe it's a good time to just jump out. Yeah, I know. So obviously, yes, accumulation, the early phase where the cycle gets a rock bottom area and it starts to go a little bit boring. We've all been through that. The markup stage is kind of where we're going to go towards, which is basically an upward trajectory. And this is where you start getting FOMO and stuff. Now, especially if you're in Bitcoin, you would have got the FOMO. Altcoins, maybe not yet, but that probably will be coming. The next phase, obviously, distribution, where you start seeing, no offense to anyone, but retail people becoming exit liquidity, so to speak, right? And that exit liquidity becomes very, very daunting for a lot of people because they are buying as things go a bit crazy, and ultimately the early people are starting to sell because the reward is there. Why not? And then the third was obviously the markdown, the bear market, the decline, which is where it gets nasty, right? But let's talk about something more obvious. Something is happening, and this happens every couple of years. It's called the liquidity cycle. The global liquidity cycle is a periodic expansion and contraction of global financial liquidity, essentially the ease with which money can flow through the financial system. We are starting to go into a point where we're going to be rising, which is on this chart here, as you can see. Now, this is a lot more technical, but Bitcoin follows the M2 global liquidity. We'll come on to that in a bit. And if we're going to start seeing interest rates drop, quantitative easing happening, which essentially means that money printing is going to go on, we're going to get expansion phases, we're going to get liquidity coming in, and that's going to increase borrowing. It's going to increase people using their money, loans, mortgages, credit cards, all that kind of stuff, right? It's huge. And if there's more liquidity in a market, it's going to move more. And this kind of all relates back to previous cycles, and this is where it gets very, very interesting, how Bitcoin is becoming an alternative investment wealth strategy. Then we talk about when Bitcoin hits certain levels, when it hits certain price points, algorithms on social media are going to start talking about it. You will be more interested in wanting to learn. And again, we'll talk about the learning phase in a second because there's a lot to get your teeth into, especially if you're following cycles, and altcoins will change narratives an awful lot. And then it gets very, very interesting. But ultimately, it's all kind of a part of that global market system: stock market, bond market, real estate, consumer growth, economic growth. This is why we talk a lot on Learning Crypto about CPI, job data, FOMC rate cuts, and you've got to have an understanding because that fear and greed is going to spook the market. Before we go on, check out our website. We do have some amazing offers right now. We always look to kind of give you an idea of what we're doing, and our premium videos, our live streams, and all that kind of stuff will help you stay current in the market. There's some huge offers as well. So yeah, feel free to jump in the Discord. So the first sign of a little bit of a change over the course of the last couple of weeks is the fact that the ETF inflows in cryptocurrency are really getting bigger, which is good, right? You can see yesterday's date, huge. 14th, massive. They're starting to get really interested. And when we talk about August, September, it's often a bit of a wishy-washy month. We'll look through the Bitcoin returns on average in a second. But ultimately, if the taps start to turn on, people are going to be interested. And this could be the first ever bull market, realistically, when we get retail boomer participation through BlackRock, Fidelity, all these other companies, which are institutional based. They just go in it, they click on, I want IBIT, I want whatever, boom, off they go. So in terms of historic returns, you can see here already, Bitcoin's starting to show the signs of life. October is often a very bullish month. Usually it's a bit rough at the start and then it gets a bit better. And we've had that again. And into November, December could well be pretty good too, into a Santa rally and maybe into the following year. The problem we have is it too good to be true? And this is the thing. We often talk about when you try and beat the market, if you're a psychological trader or if you're a positional holder, you want to try and do a little bit different to other people so you've got a bit of an edge. But realistically, sometimes in crypto, the breakout and following the market is often the best way to do it. And we're seeing that again. If you are in the market, you've got to participate in the right times and be out at the wrong times. Currently, it feels like we're at the right time to be in the market, certainly when we look at the data. And I think I want to back you all up with this one and talk about a certain tweet that has got a lot of people talking. Bob Lucas is, in my opinion, one of the best analysts out there in terms of cycle narrative. He's been doing a lot of stuff in the Bitcoin space. And this is a video kind of screenshot essentially of, or chart screenshot from a video that he done. And he explained it in more detail in terms of where we currently are. And we've had that market low and we seem to be following the script in terms of where the next phase of the market's going to be. It looks like we're going to have a bit of volatility over the next 90 to 180 days, essentially, where it's going to go a bit bananas. And if we repeat the same monthly chart here, where it's just non-stop green for 4 or 5 months, people will talk about it and everyone will get excited. Remember the start of this year, it got crazy. And then that puts us in that ballpark figure of mid to Q4 2025. So we could well be, this is the pointer, 8 to 12 months away from the market markdown, where it's going to start going into that distribution phase where people will start selling. Now, distribution doesn't mean it's going to go down. It means the mania season is going to probably go from that markup into distribution. What I mean by that is we're going to go up and then people will start selling. But because new people are coming, you're not going to see it reflect in the price. Often you find that there'll be RSI divergence appear or some sign of weakness in volume, but ultimately what happens is the price still goes up because of the hype in the market. It just allows people to get out easier. So we may well find that and then into a markdown phase, which could be in 2026. A lot of people have been talking about left and right translated cycles. And I know this might be baffling, but obviously, as I say, join our premium, you'll probably be able to ask all of these questions, but we seem to be perfectly on track. And the script is written. Obviously, this is when Bitcoin was at 62,500. Now we're hitting those levels where we might be breaking out and people might be getting very, very excited. So we'll see how things go. In terms of following the global liquidity, this is, as I've mentioned before, in terms of the whole banking infrastructure. If you don't know what this is, in terms of what it is, it's obvious. It's all the major banks in terms of all this kind of stuff. Yeah, it's all there, but the data is here. When Bitcoin, which is the black line, goes up or down, often the blue line follows, right? Which is very, very, very interesting. So when it goes down, it goes down. I know, obvious. But where we are right now, we seem to be in a bit of an accumulation phase, which could be very, very interesting. We may have already had a very, very interesting run, and we might be in this accumulation phase going into that markup stage, which could be scary, as this is breaking all-time highs, which again, as I say, interesting, I know. So be very, very mindful of that, and we'll see where we go from here. Just to back you all up in terms of previous cycles, in terms of where these have also topped out, you can see the black line right now, we are following to a burgundy. Lovely. Problem we have is, how high does it go? Or how low does it go? Diminishing returns. All those are unanswered questions. We cannot answer them. We're speculating. But what we can look at is in the last 2 cycles, we've roughly turned around in and around this October time. Now, for me, I would always say err on the side of caution for going for specific dates. What you should be looking at, how much money have you made? Obvious, I know. Not financial advice, but if you're looking at your portfolio and you're thinking, doing all right, eh? And then you think to yourself, getting a bit mad, isn't it? Members are increasing on learning crypto, for example. YouTube views are going through the roof. I'm really, really interested in looking at certain things, and I think when your friends and family start talking about crypto, exit signs, right? Or if Coinbase or Binance or whatever exchange you're using start to rank higher on the financial kind of apps, you're probably thinking, probably time to get out. And you got to kind of put yourself in a date point where the previous cycle ended around here. I'm going a bit crazy. I've made a lot of money. Everything's going mad. Should probably start scaling out. And I think that is what you need to do. And I think that's important to know. And I've done it myself personally. And I'll show you some other bits and pieces on the chart in a minute too. But you've got to have a rough figure. In my opinion, if we're in between July 2025 and October 2025, and we are significantly higher than where we have been over the course of last year, and you were positioned then, you should be looking to release some profit. Now, I know there's tax implementations here and all kinds of weird and wonderful stuff. There's a video which, as you can probably imagine, tax questions in the chat is a really good exit sign as well, weirdly. But we have done a tax video. There's a, it's on the channel. Feel free to go and check it out. But reality is you will make money if you are following the cycle narrative. A lot of people don't believe in it, but the proof is in the pudding. We've already had it every single time since crypto has been kind of around, which is mad. So this is where we are in terms of cryptocurrency right now, in terms of Bitcoin alone. This is the daily time frame. This is a 3-day time frame. It's looking likely we're going to start breaking out of this kind of area. Maybe it's very, very wishy-washy. But one thing that I have marked on my chart, and feel free to do the same if you're interested, is the 19th of April 2025 is 1 year from halving, pretty much, right? So one of the biggest things that we talk about is the first 100 days of halving's a bit shit. Then it gets a little bit more interesting. Normally 1 year post-halving, it's a lot higher. Now, I'm just saying, mentioned it before, if you're going to go from July, make a note of April. If in April we are way higher, it might be time to take some money off the table then too, because at the end of the day, you've got to go off your gut feeling, your psychological kind of, your joints and your bones, essentially. If they start rattling, you start getting a little bit upset or a bit emotional about certain things. And if you start seeing a bit of, fear on red days, you've got to look at that. So what you need to look at is that. Another thing you need to look at is obvious, genuine price targets, right? I don't go too deep in this, but realistically, you need to have some levels. Now, for me, the swing high to the swing low, $83,000 is where I think retail FOMO will come into the market. That's my personal opinion. We've got 100,000 up there as well, and then we've got up here, we've got some crazy numbers. Now, if we are anywhere near this, I'm sorry, but I probably will be shaking my tits off, and I'll probably go, I'm out. I would. Regardless of where we are in terms of duration, I've got to look at that level and think that's unbelievable. Obviously, that's a massive box, by the way. Let's just scale that back a little bit. It's a bit mad. But you get the idea in terms of where you should be. And if we are anywhere near that year from halving into July, October, of where the cycles have kind of like been a bit wishy-washy, and even in the prior cycle, in May time, we really collapsed. And then we came up for a second wind, right? You have to take money off the table when you feel you've made enough. And I know that sounds really obvious, but in some cases it is. And I'm sick as a founder of this company, getting people as members off the back of people losing money, right? You need to understand taking the bag is one of the biggest obvious things. It's one of the worst pain points as well. So when we look at that, it's huge. When we look at the prior cycles as well, this is old, by the way, but it's kind of done from breakouts, not perfect. But again, this up to August here is 644 days from the breaker structure here in terms of the potential bull cycles. Now, these have all ran rough numbers, give or take. These are not from tops. These are from like structure breaks and changes, 600 days. So if we're even going towards roughly 600 days, it's going to bring us roughly to summertime of 2025. That's on par with the past. So realistically, we should be having our kind of lookout for the year from halving, which is April, and then into the summer of July. But often you find in July, August, September, it's a bit crap. It's rubbish. And we can prove that by looking at the past data. Q3 is not the greatest. Even in a bull cycle, it's not amazing. Whereas Q4's a lot better. Q1, obviously a lot better. We always see Q1 and Q4 a lot better. You can see this here. It's there. Q3, not good. So you may want to think, I want to get out of this market by September of 2025, providing we've had the returns. If we've had the returns a lot before that and you've kind of shut yourself a little bit and you made good money, go for it. The idea is, and everyone's got an idea of wealth, to create as much as you can and get out without getting battered. But we all know, and let's be honest here, people will come into this market late. They will come in when this is crazy numbers, where it's ridiculous prices, when we're all the way up here, when we always say the last of the party will always get battered and tend to do, first through the door, bang, smash. And there will be people buying tops. And, Gaz, for example, he bought in the late areas of 2017. You get smashed. So be mindful of that. Anyways, if you like this video, leave a like. Check out our website for more content and enjoy.